Welcome back to Stocklabs for another market recap. We just finished the first full trading week of December on the 9th, and it was a bit of a bearish week, kind of like we were expecting coming in. Um, there wasn't really a whole lot of reason to be looking for a big bounce this week or anything, or like an extension of the little bit of a bounce we got on the end of the prior week. Selling basically started early Monday, Tuesday, Wednesday, and then we had a little bit of an up day on Thursday, and then more selling on Friday. So again, 4 out of 5 down days on the week with the performances of the indices. Qs were down 3.6%, S&P was down 3.4%, Dow down 2.8%, and IWM, big loser, down a full 5%. Crude oil down 10% for the week. Another bad week for crude. The crude trade looks like, seasonally this is kind of a weak period. Probably a lot of the commodities markets are taking the recession risk more seriously than the stock market is. Stock market or equity market is kind of focusing more on the Fed is going to stop raising rates side of things, but commodities are having a hard time, especially crude, which is at somewhere near, like, I don't know if it's even positive on the year anymore. I'd have to check. Bonds flat, gold flat, more or less. So nothing too special there. For our leadership stocks, they had a bit of a soft week as well. Tesla, big underperformer, down 8%. Same with Google, 8%. Facebook down 6%. Amazon down 5%. Apple down 3.9%. Kind of more in line with S&P, Nasdaq. Microsoft 3.8%, same thing. Netflix outperformer again, flat. Nvidia actually slightly green on the week, so not too bad. But these major players, they're all not only was it red, but they're all really underperforming the Nasdaq itself as well, which is not good. So yeah, bad week for leadership stocks, bad week for indices. Check out breadth. Breadth, once again, as you can imagine, pretty soft. Consumer down 4.4, healthcare down 5.6. And basic materials down 7. We've seen the materials stocks, which is what this is, hold up and sort of buck the trend again, versus the actual commodities falling apart. But now it looks like this is starting to break. The stocks themselves are starting to catch down with the commodities. Tech down 3.25 on a median basis, slightly better than NASDAQ. Services 4, industrials 3, utilities basically flat, down 1%. And on a subsector basis, more or less nothing on the upside. We've got Chinese burritos again, quote unquote outperformer, up 1%. That's nothing. And on the downside, we have a lot of stuff. So we have a lot of economically sensitive stuff. You can see the oil and gas sector sprinkled in here. See 25, got 50, and 52 sectors, down 5% on a median basis versus 0 up. So clear sell side skew on breadth. And if we check this against market caps, so just look at the different slices of the market. Down 4.8%, 1 to 5 billion, kind of in line with the Russell. 5 to 10 billion, down 3.6, slightly better than Russell. Large caps, 10 to 50 billion, down 3.3, more or less in line with the S&P. 50 to 100 billion, down 3%, a little bit better than the S&P, and TerraCap's 100 billion plus, down 2.6. So even that is a little bit better than S&P and Nasdaq for the TerraCap. So I mean, this breadth. I mean, the selling was broad overall. Across industries, across market caps. It was just a pretty standard uh, bearish week that we've had for a lot of the year. And on intelligence, let's see what we have for this week. Okay, top rated ETF, Soxol, Bull Semiconductors. The semiconductor trend has sort of held up. I mean, the semiconductors have started to outperform a little bit relative to other tech stuff. I don't know if that's going to stick, but it's been sort of for a couple weeks a little bit of a trend. So Stocklabs is looking for semiconductors to actually make an up move this week, along with utilities. Although we have short Nasdaq on here as being bullish, so maybe I don't know. Maybe if you're going to be long semis, you can short the Nasdaq as a hedge, but whatever. You don't want to get too cute. Um, and then small caps are rated bullish. So small caps were the big underperformer this past week. They might catch a little bit of a bounce. See on the other side what we have here. Okay, bearish energy ETF is bearish, so bullish energy. It seems like Stocklabs has been kind of trying to pick out these energy bottoms, energy stocks. Hard to tell. This one is okay, bear energy. This is going to be down with like almost 90%. Like it only has 11% chance of being up. So 90% chance that energy will be up this week based on the last year. Okay, we got another short energy ETF, blockchain bearish, pretty thematic. Biotech, okay, ultra biotech is bearish, so bearish, health and bios and developed markets, momentum. Okay, just gonna ignore that. Probably not that liquid of an ETF. Yeah, between the bullish and bearish side of these ETFs, it's kind of just a little bit of a mess right now. I think the market is kind of just, it kind of told you it's not going to rally into the end of the year. And, at best, we'll probably get some just wide range chop for this week. At worst, um, I think the market could get another week similar to last week where it's just more or less straight down before it calms down, for everything to die down in the holidays. We did get very close to being oversold in the market, but I mean, not that close. So actually this oscillator, you can sort of see it reset a bit by the end of the week. So there is some room to like explore lower before we get an oversold signal. That would sort of be my, I guess, bit of a base case for this week. Down week, get an oversold signal right before or right around sort of Christmas, and then look for that to be a little bit of, a solid low for the market and then head into the new year. But really no interest in chasing, trying to just pick out a bottom without Stocklabs sort of giving a global signal here. Again, we haven't had an oversold signal since September. The market had a pretty bad week. I don't know if it was the worst week since around this time, but it was, if not, it was probably pretty close. So yeah, overall, it's going to be a sloppy week. I think at least in the beginning of the week, you'll see some downward pressure on equities. We will get the we will get new inflation data and all this stuff. I mean, the inflation data is not expected to take another leg up, but we'll see what the expectation, I think, is that um, the Fed is going to do another sort of 50 or 75 basis point raise. You're going to get inflation data that's kind of similar to the latest data, 6-7% year over year inflation, which again does not take the Fed out of the picture. They're not going to stop raising rates. It's just going to be a little bit slower pace. And then we'll see what equities do with that. I mean, I think probably they're not going to enjoy it either way. So, best case scenario, the inflation data comes in a little bit soft. You get kind of a smallish down move in markets. Worst case scenario is that inflation numbers do take another leg up, and then you would see like a minus 1,000 Nasdaq day, but I think that's unlikely. So, downward pressure to start the week. Coin flip on CPI data, and then we'll see how we can finish the week out. As we get closer to the holiday season. So yeah, that's all from me. Yeah, don't do anything crazy out there. I mean, might not be able to afford Christmas presents if you lose all your money in the market. So yeah, be careful, and we'll talk to you guys next week. Bye.